Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. I will also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. So, in trade yesterday in the US markets, that is, all the three US indices ended on a mildly positive note at record high levels ahead of the Fed policy outcome on Wednesday and the May CPI data. So we had the S&P 500 which ended at 5,360 levels with a gain of 0.26%. Going ahead, it is likely to continue its upward journey and test the levels of 5,400 followed by 5,460 in the short term. While on the downside, the zone of 5,280, 5,310 will act as the immediate support for the index. Brent crude has continued its pullback rally and ended above 81 levels per barrel with a gain of over 3%. Going ahead, the zone of 81.682 will be crucial hurdle for Brent oil, while on the downside, any sustainable move below the levels of 79 will lead to resume its southward journey. If we look at the dollar index, so the US dollar index has rebounded to 105 levels ahead of the policy outcome. Key level to track is 105.65 on the upside. Now coming to Nifty, so the first trading session of the week was lackluster with the benchmark index fluctuating within a narrow range of 185 points, marking its lowest daily range in the past 7 trading sessions. This movement resulted in the formation of an NR7 pattern on the daily scale. On the daily scale, if we see, it has formed a small body bearish candle at the all-time high level, indicating a lack of commitment from both the buyers and from both bears and bulls. On the derivative front, if we see, the June futures has dipped by 0.33% and the cumulative open interest of the current, next and far series has also dipped by 5.25%, which indicates overall long unwinding. Among the constituents of Nifty index, 12 stocks have witnessed long built up, 15 stocks have witnessed short covering, while 10 stocks have witnessed short built up and 13 stocks have witnessed long unwinding. On the weekly expiry, so if you see, the put call ratio for Nifty currently is at 0.82, while on the June series we have the put call ratio at 1.12. If we look at the OI data, 23,300 strike has significant call open interest followed by 23,400 strike, and on the put side we have 23,200 which has significant open interest followed by the 23,000 strike. Going ahead, the zone of 23,100 23,070 will act as the immediate support for the index. Any sustainable move below the levels of 23,070 will lead to a further profit booking in the index up to 22,950. While on the upside, the zone of 23,350 23,370 will act as the immediate hurdle for the index. Any sustainable move above the levels of 23,370 will lead to a sharp upside rally towards the mark of 23,500, followed by 23,650 levels. Now coming to the update on Bank Nifty. So in trade yesterday, Bank Nifty marked a high of 50,253 and thereafter witnessed profit booking in the second half of the session. This resulted in the formation of a small body bearish candle with a long upper shadow. The long upper shadow indicates a bit of selling pressure at the higher levels in Bank Nifty. However, currently if we see, the index is trading above its short and long term moving averages. The daily RSI is oscillating in a sideways zone as per the RSI range shift rules. On the derivative front, if we see, the June futures has dipped by 0.35% and the cumulative open interest of the current, next, far series has dipped by 5.3%, which indicates overall long unwinding. Now if we look at the option chain, that is for the weekly series, 50,000 strike has significant call open interest followed by 50,500, and on the put side we have 49,500 which has significant open interest followed by the 49,000 strike. For the current weekly series, the put call ratio is at 0.68, which indicates a bit of call writing on the heavier side in comparison to puts, while for the monthly series we have the put call ratio at 1.05. From an intraday perspective, the zone of 49,500 49,450 will act as the immediate support. Any sustainable move below the levels of 49,450 will lead to a bit of pressure. On the upside, if we see 49,900, 50,000 will act as the crucial hurdle for the index on the upside. That is, any sustainable move above 50,000 will lead to resume its positive momentum up to the psychological mark of 50,500. Let's have a quick look at the key market indicators. So we have the volatility index, that is India VIX, which has witnessed a further dip by nearly 3% and ended below 16.5 levels. The index has witnessed a significant drop post the election outcome. Going ahead, it is likely to test its 200-day EMA level, which is currently placed at 14.84. If we see the advance decline ratio, it is largely tilted in favor of advances for the third consecutive trading session. Let's have a quick glance at the key sectors which are in focus. So like we have been highlighting, Nifty Pharma has given a consolidation breakout in Friday's trading session itself. It has witnessed follow-up buying in trade yesterday, which validates the breakout. We believe it is likely to continue its positive momentum and test the psychological level of 20,000 followed by 20,200. We have Nifty Healthcare also, which is in positive traction, along with Nifty Reality, which marked a fresh all-time high in trade yesterday. Going ahead, any sustainable move above the levels of 1,090 will lead to an upside rally in the index. Now coming to the FII DI data, both FIIs and DIs were net buyers to the tune of 2,572 and 2,764 crores respectively. FII long short ratio, that is for index futures, currently stands at 34.25 on a net basis. This as they purchased about 48,938 index futures in trade yesterday. On the stock futures front, we have FIIs who sold to the tune of 69,855 contracts, while on the options front, FIIs sold 30,876 call contracts and simultaneously sold 92,067 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.